Hello and welcome. You're watching Buy Now, Sell Now on ET Now. I'm Alex Matthew and with me is Cheryl D'Souza. We're going to take you through the next 1 hour of trade in the markets. Let's in fact take a quick look at how the markets are faring as of now. We are in the green for the second day in a row for the benchmark indices, but we've cooled off just a little bit from the start. In fact, you had gains of about 1% each for the benchmark indices, but now we're gaining about 0.6 or 0.7% for the Nifty 50. We're still a ways off from that 15,000 mark that we lost earlier a couple of sessions back. But let's also talk about the sectors. In fact, the auto index is continuing to see the gains that it saw at the start of the week. A few strong numbers coming in with regard to the Feb sales for some of those auto companies. The FMCG index is also gaining, looking quite strong in trade today, about 0.8% for that index. But the outperformer so far in this session has been the IT index with gains of about 1.7, 1.8% for that index right now. The other sectoral indices as of now in the green, but the gains are somewhat muted. Let's also talk about the broader markets, and we've seen over the last couple of weeks that the trend has been that the small cap and the mid cap index have been outperforming, and that continues to be the case today as well. We'll have to see whether that pans out for the rest of the month. To tell you a little bit more about the individual stocks that are currently doing well though, I'm going to hand it over to Cheryl. Cheryl, what are you picking up?
Hi, good morning, Alex. Definitely a lot of stocks that are in focus today. And first up, let me talk about Shipping Corporation of India. The government has received multiple expressions of interest for selling its 63.75% stake in the company. So Shipping Corporation of India is seeing strong up move in today's trading session. Apart from that, you have Bpcl that is buzzing in trade because board has approved proposal to sell its entire 61.65% shareholding in Numaligarh refinery and to a consortium of Oil India and Engineers India. So on back of that, you have Oil India as well as Engineers India that are surging in trade. Camlin Fine is the other stock that is seeing a sharp up move as well in today's trading session. Apart from that, you have Indraprastha Gas, that's IGL, that has raised CNG as well as piped natural gas PNG prices from today onwards. On back of that, you also have MGL that is buzzing in trade. Hero MotoCorp is in focus on back of its February auto sales data. And then you have Kotak Mahindra Bank as well as SBI, both of them in focus on back of the recent rejig coming in the home loan rate. So a lot of individual stocks that are in focus. Also, you have the PSU stocks, Alex, that are rallying in trade as well today.
Let's take a look at how the seasonality has played out in the markets in the month of March so far. We're only a couple of days in. Jayesh is joining in with more details. Jayesh?
The market has now entered one of the strongest seasonal periods of the months of March, April and May. During the last 5 years, the Nifty has generated more than 2.5% return on an average basis during the month of March, and the same case for the Nifty Bank, which has returned more than 4.5%. For the small cap space and the mid cap space, the returns have been in the range of about 3.5 to 4% during this time. Now, as far as the sectoral performance is concerned, you have the PSU space that has been buzzing. The Nifty PSU Bank has been the top gainer, 6% return in the last 5 years on an average basis, and the Nifty PSE index has also given you about 2% return in the last 5 years. Some of the other sector indices that have given you handsome return, the Nifty Real Estate, Financial Services and Infra Index have given you anywhere between 4 to 5% return, and then you have the Nifty Energy along with the FMCG FMCG pack that has advanced 2 to 3%. As far as the stock gainers and losers are concerned, it's very difficult to find a particular stock which has given you positive return each of the last 5 years during the month of March, especially given the fact how the month of March 2020 had turned out for the market on account of the pandemic-led correction that we had. But there is one name that really stands out, which is Nestle India. That has given you positive return of 7% during each of the last 5 years during the month of March. And on the flip side, you have Lupin that has managed to decline about 8% on an average basis in each of the last 5 years during March.
All right, that is the ET Now insight that is coming in from Jayesh. Let's get on board. Our guests for today, we have Kunal Bothra as well as Ashish Maheshwari joining us. Good morning, gentlemen, and thank you for joining us on Buy Now, Sell Now. Kunal, I'll come first to you. What are you making of the market moves coming in today? Definitely started on a firm footing, but we've actually given up most of the gains. So how's the market setup looking like? And also, what are your ideas for our viewers today?
So good morning, Cheryl. Yes, I think the start for the markets was a bit positive. You had banking index, Nifty also doing pretty well. But then I think the larger texture is what one has to understand, that the Asian markets are the ones which are under pressure. So that's going to play some bit of heaviness for our markets. And there was also one very important pattern, that the volumes on the banking stocks particularly. So we compare the volumes which happened on Friday, where the markets corrected sharply, banking stock volumes, and then compared to the volumes which were seen yesterday, when the banking stocks and the bank Nifty managed to rebound. So there was a clear contrast in terms of volumes. On Friday when the markets were going down, the volumes were higher. Yesterday, when the stocks were moving up higher or seeing a bounce back, the volumes were apparently lower than what was there on Friday, which means technically we call this as a feeble bounce on the individual stocks. Now, in a matter of in an environment when there is a feeble bounce, it's possible that those high gap ups and gap downs, they generally don't sustain for too long, and it's bound to be that the index comes back into a flattish kind of a territory. So it doesn't come as a surprise, frankly, that the index is now, or the bank Nifty as we're speaking, is now into the negative territory. I think this is largely going to be the texture for the markets over the next couple of days at least. Now, I would suggest a couple of buy calls in the expectation that the mid cap end of the market would keep on buzzing, like the way we've seen the last few days. So the first one which I'm recommending is about Bodil Chemicals. Many of the chemical stocks have done exceptionally well. We saw GNFC, Bodil Chemicals, Sudarshan Chemical, which was the pick yesterday as well, had done pretty well for themselves over the last few days. So this is a stock in a sector which is in strong momentum. Bodil Chemical has given a strong breakout of a multi-year timescale chart. Would suggest a buy with a positional target of 97.98. Stop loss could be kept at 83 mark. And the second is more of a high risk trade. It's about India Bulls Housing. Now, after quite some time, we are seeing a formation of a bullish flag pattern on India Bulls Housing. The stock is bouncing off from its almost its near perfect 50-day moving average as well. And the stock is also nearing a what we call technically a parabolic SAR breakout as well. So on the back of these key technical parameters, I would expect India Bulls Housing to do pretty well for itself. Buy with a positional target of 246 and stop loss 226.
All right, we've also got Ashish Maheshwari, Director, Blue Ocean Strategic Advisors on the show. Thanks so much for joining us, Ashish. Alex here. Just initially want to get your view. We've got significant updates on the front of the auto sector. We've seen the numbers for the month of February. And there's also significant updates perhaps on the crude front, both upstream and downstream. Ahead of the OPEC meeting, there's a lot of interest whether there's going to be a move on the production side. How do you play the crude theme overall? We're also hearing murmurs that perhaps the government might actually be inclined to reducing the taxes on petroleum products, on petrol and diesel specifically. So that might be interesting as well. So what are your buy and sell ideas as of now?
Yeah, as far as auto and oil sector is concerned, I think in both sectors we have seen very decent run up already. And if these petroleum products come under the GST regime, then you are going to see excellent run-up even further from current valuation. Like our Prime Minister has already indicated that government is working towards getting these petroleum products under GST. So this will reduce the prices of oil and gas as far as both prices are concerned. So this is the reason we have seen good run-up happening in oil refinery stocks, and I think this momentum is going to continue. So BPCL is going to be anyway here pick number one because of on account of disinvestment where government is diluting their 51% equity in BPCL. So this is going to be pick number one in BPCL. As far as auto sector is concerned, again, we have seen good set of numbers in last month also from automobile companies. And I think the momentum which has picked up post-COVID, particularly in tier 2 and tier 3 cities, this is going to be maintained. So companies like Mahindra and Mahindra, JBM Auto, Bajaj Auto, they will continue to do that. Now, as far as my low risk, low return and high risk, high return ideas are concerned, I'd like to share a couple of ideas. My low risk, low return idea is J. Kumar Infra Projects Limited. This is again a very specialized EPC company which operates out of Mumbai, and they are having almost 51% of order book by way of metro related work. So this is a company which is having almost 11,000 crore order book, which is executable in next 3 years. And they are also expecting around 4,000 crore worth of orders, which may they get in next 3 to 4 months. As far as debt is concerned, they are very comfortable at net debt level. They are having the ratio of just 0.08. So in quality infrastructure stocks play, this is one of the cheapest stock, which is available at just 6 price earning multiple from FY22 earnings. So it has a potential to go up to 250. As far as high risk, high return ideas concerned, I like to go with a retail story, which is V-Mart Retail. Again, this company was into limelight recently. They raised money by way of QIP. And if you see the business profile, again, they are the ones like which are primarily present in UP and Bihar market, where they are having 60% of their 91 stores which they operate. If we see their last quarter performance, against September loss of around 17-18 crore, they did a net profit of 47 crore in December month, and I expect this rate to continue. So if I compare this stock against the peer sets, which are available at almost 20 plus at their EBITDA of FY22, this is available against 6 to 7 price earning EBITDA levels. So this is a stock which can be accumulated at this level with a price target of 3,300 in next 6 months.
All right, so those are the ideas coming in from Ashish for you this morning. His high risk, high return idea is V-Mart, and low risk, low return idea is J. Kumar Infra. All right, hang in there, gentlemen, both Kunal as well as Ashish. We'll come back after a break and with the viewer queries, so don't go anywhere.
Welcome back to Buy Now, Sell Now. You're watching the show on ET Now, and this is also the show that gets you answers to your queries. And some of you have written in. I encourage all of you listening in and watching to send your queries to us as well. You can write to us on any one of our social media platforms. Let me take the first query of the day though. This is from Ajit Gulati, and he has bought 300 shares of Bharti Airtel at a price of 613. Unfortunately, Ajit, the stock hasn't had a very good February, and in fact, even in yesterday's session where we saw a bounce back for the entire index, and in fact, quite a few stocks got caught up in that momentum upwards. Bharti Airtel perhaps one of the only stocks, in fact the only stock on the Nifty that didn't do well for itself. I'm going to come across to you, Kunal. Unfortunately, Ajit seems to have bought very close to the peak, and the stock has lost quite a bit of ground since then. What would you advise that he do?
Oh yeah, I think he's bought at the higher end of the price curve for Bharti Airtel, but I think at those levels of 600, 610, there was also some longer term breakouts which were visible for the stock. Now, you also have to try and assess the constant developments which keep on happening into the stock prices. Now, the two of the data points which particularly have been have probably come into the light for Bharti Airtel, at least in terms of derivatives data. One of them is the sharp rise in the open interest since last 2 days. So, since the last 2 days, we've seen a jump of almost 20 to 21% of open interest on Bharti Airtel. And then when you try and have a conjunction of price moves the last 2 days, we've seen the stock has corrected from 600 to 530, 535 levels where it's currently trading. So which means that this is more of a tilt towards the short built up on the stock price. Then when the other data points, which is also very very interesting, indicates that there has been a huge shorting of call options for the stock price. So from 600 strikes towards 580, which was visible on Friday last week, the option strikes have rolled down to 550, 540 levels as well, which means that these are the hurdle points for the stock price in the near term. Now, generally, when you see hurdle points which set across into the stock prices, these hurdles they stay for at least a couple of weeks, if not more. So, what I'm trying to indicate is possibly Bharti Airtel could remain in a slight bit of a downward drift. It could have a lot of pressure on rallies as well. So, I think 550 now is a major resistance for the stock, and it could probably drift in a band of 500 to 550 over the next couple of weeks. So I would expect the stock to be range bound. If you're looking to average, then I would suggest that average, if the stock comes closer to this lower end of the band, so closer to 500 is where I believe that you should look to average the stock price. That will help you to lower your cost price and then expect probably a strong revival over the medium to longer term.
All right, that's the cue coming in from Kunal on the technicals for Bharti Airtel. Let's also take a fundamental view. Ashish, coming to you on this one, just looking at the long-term prospects for the sector as a whole and Bharti Airtel within that, you've had subscription data that has been a little encouraging perhaps over the last few months for Bharti Airtel, but the question on pricing remains whether they're going to be able to up the pricing and therefore their margins. So how would you play Bharti Airtel for the long term?
It's just fundamental. We talk about there's nothing wrong with Bharti Airtel. In fact, everything is just going in the right direction. Their ARPU has improved. They are cutting more consumers from Vodafone Idea to their fold. And at the same time, last quarter, they also came into profit. So as far as the numbers are concerned, I don't think so any disappointment is there. Only thing is right now this sector is having not that much fancy because market is having more inclination towards PSUs and banking sector, etc. So my suggestion will be to in fact average at 525 levels, and in couple of months you may get again 575, 580 levels. So my advice will be to invest at this price in Bharti.
All right, that's the view coming in from Ashish on Bharti Airtel. Moving on, and let's get on board our next viewer query. And this is from Ajay Mathur from Delhi. He's written to us saying that he wants to buy IHCL for the next 3 to 6 months. Is it a good time to enter the stock? Kunal, IHCL, remember the hospitality segment really took a sharp knock due to the COVID-19 pandemic, but since then they've actually been recovering. What's your view on IHCL and how does it look? How are the charts for IHCL looking like? Good time to enter?
I think good time to enter, and the stock had done reasonably well from those March to 2020 lows. I think if I'm not wrong, the stock has almost doubled or slightly more than doubled from those levels. So it's been a good and a decent recovery for the stock. Even at a time when the world is still reeling under some sort of a pressure as such, even at these times. So it's been a good recovery. The stock also has a typical habit of going into a few weeks of rallies, so 2-3 weeks of rallies, and then it goes into at least 6-7 weeks of consolidation. So like what we've seen 3 times for the stock price in this last 9-10 months, the stock has exhibited the similar pattern. Like for example, the recent rally for the stock was in the month of I think November, December, where the stock had rallied from 100 to 130, 135 levels. And from there, it's now consolidating. So these are good times, basically where one should look to average, because buying at a time when the stock remains in a time correction should be taken as a good opportunity. So a good stock to buy, especially from a longer term view. And I think in terms of price levels as well, where the stock is currently trading at 120 approximately, it's a good entry zone.
All right, good stock to buy and a good entry zone is what Kunal has to say for IHCL. Fundamentally, Ashish, does it make sense to look at IHCL at this current price? He wants to buy for a period of 3 to 6 months. That's our viewer, Ajay Mathur. So what should he do? Does it make sense to enter IHCL at this juncture?
Actually, IHCL is a stock which cannot give you, a very superior kind of return in next 3 to 6 months. At least you should have at least 1 year time horizon in case you want to buy this stock, because in the next 3 to 6 months, things are not going to change a lot for hotel industry is concerned, because the business traveling is still not picked up the way it used to happen pre-COVID times, and it's mostly holidays, travel to Rajasthan, Goa, Kerala, and the Maldives, etc., which is generating revenue for them. So my advice will be to have a slightly long-term vision if you want to buy Indian hotel. Though you are not having much to lose from this valuation, but only thing is appreciation from current price is also very limited. So 1 year time frame is something on which you can hold on and can get 20% kind of return.
All right, let's quickly mark where the markets are right now. At the start of the show, we were with gains of about 0.7% for the Nifty. Since then, we've given up some ground for the Nifty. In fact, it's trading only perhaps about 0.2% in the green right now. Just want to also point out that the banking index, the Nifty Bank, which was perhaps not looking as strong as the other sectoral indices, it was gaining only about 0.2%. That has given up all of those gains and is now trading in the red with losses of about 0.4%. So I just want to point that out. As of now, we've seen just a bit of weakness coming in at this hour in the markets. But I do want to take the next query, and in fact, it's an interesting one. It's on Nestle India, and we've got this query coming in from Harsh Shah from Mumbai. He's asking whether it's a good opportunity, Kunal, to buy into Nestle post the correction. And incidentally, Nestle is doing quite well for itself in today's trade after that correction that Harsh mentioned. So would you still say that the opportunity exists?
Well, absolutely. In fact, Alex, a couple of days back, I had given a buy on Nestle as well, expecting that the stock could probably have bottomed out. There were strong signals of divergence which was creeping into this name. So typically it's the FMCG stock or the sector has been beaten down, but then there are signs and signals which indicates that the stock in the short-term charts enter into oversold territories, and then it lands up into some strong support zones. Indicators give you a precursor of a possible reversal into the stock prices. So we saw those ingredients shaping up into Nestle, and which is why I had given a buy. My targets on the very, very short term are closer to 17,200 for Nestle. So there should be a room for upside for another 500 to 700 points at least. But those are trading gains. So what happens is if the market goes into a volatile phase, possibly, then there's also a possibility that the money could shift back into the old defensive names like the IT, pharma, and FMCG. So I think you have to take it step by step. So at least from a short-term view, I would expect a possible another 500 to 700 points uptick on Nestle. But if the market goes into a bit of a corrective kind of a mode or a high volatile kind of a mode, then possibly FMCG stocks converting their short-term rallies into trends is also a fair possibility. So I would suggest a buy on Nestle even from current levels.
All right, coming to you, Ashish, on this one, because I think personally for me, during the lockdown, I found that I was eating a lot of things that I ordinarily wouldn't have. And I don't think a lot of people will have a different story to that. So having said that, with Nestle, would you say that it's a good opportunity to buy post the correction?
Yes, I agree. In fact, the stock has already corrected by almost 2,000 rupees from the peak. And the fundamentals have in fact improvised after in that correction period. If you see their chocolate products and the milk, confectionery, all segments are doing pretty well. And Maggi is again in expansion mode in that segment also. I think again in next couple of years, the game changer is going to be another 50 new product launches Nestle is having on the table. So this is a company certainly is one of my favorite company to look at in FMCG pack, and the kind of rural reach they are targeting in the next 2-3 years. I won't be hesitant to say that the stock can even touch 25,000 rupees if somebody can hold for a couple of years.
All right, that is Ashish's take coming in on Nestle. Let's move on with the next viewer query, and this viewer query is come from Ankush Sharma. He's saying he's bought shares of Sbi Life Insurance at 909 rupees per share. He wants to know whether he should hold or sell the stock. Kunal, I'll come first to you. 909 is the buying price for a viewer for Sbi Life Insurance, currently around 876 odd rupees. It's near its 52-week high levels, but how is the stock looking like? How are the charts looking? Should he continue to hold on to this particular counter?
Yeah, I think the viewer can hold on to the investments on SBI Life. The stock is still forming bullish patterns on the chart. So on the monthly charts, in fact, it's forming a what we typically call it as a bullish flag pattern on the monthly chart. So the breakout is about 900 mark, but the fact that the stock is consolidating this flag kind of a formation gives an inkling that probably a breakout could happen pretty soon. So if the viewer has a time frame of 6 months plus 6 months to 9 months, then I believe holding on to SBI Life could probably turn out to be a good trade. I would expect a target of almost 1100 to 1200 kind of a zone on the stock price post the breakout. So would suggest a hold on SBI Life.
All right, would suggest a hold on SBI Life. That's the word coming in from Kunal. Sees a target of around 1100 to 1200 if it breaks out of the 900 rupees zone. Ashish, what's your take on SBI Life Insurance? What about the insurance space in particular? And does it make sense to hold on to this particular investment for Ankush?
Yes, I'll also like to give positive view on the insurance sector per se, because I think post-COVID, all the insurance companies are getting a lot of traction as far as life is to be covered, etc. So SBI Life is tend to gain a lot post-COVID scenario because they are having one of the highest efficiency as far as listed pairs are concerned, along with the vast distribution reach what SBI Life is offering. Again, the budget provisions of having FDI limit increase up to 74% is also very positive for as far as stocks are concerned in life insurance sector. So I like to remain invested and advise also investor to remain invested, and in the next 6 months also you can expect 1200 plus price on SBI Life.
All right, on that note, gentlemen, I'd like to thank both of you for taking the time and for joining us and answering our viewer queries. Thank you so much for that. And well, we'll be back in just a short while to take you through a little bit more on the markets and a lot more, so do stay tuned. We'll come back after this short break.
Welcome back. You're watching Buy Now, Sell Now on ET Now. Let's get on with some stocks that are making headlines today. And Shipping Corporation of India, that particular counter saw 17% up move in the intraday. Private players actually queuing up for Shipping Corporation of India's stake. Ruchi is here with all the details. Ruchi, do we have any indication on what are the names who are likely to look for a stake in SCI?
Well, looks like the privatization process for Shipping Corporation of India is moving full throttle. Just yesterday, we heard from DIPAM Secretary where he said that multiple players have expressed their expression of interest for Shipping Corporation of India. And we at ET Now are given to understand that both domestic as well as foreign players are making a beeline. Remember, ET Now had reported at least 2 to 3 months ago that one of the players that could be in the fray could be GE Shipping. And that's exactly what has happened. GE Shipping has put in their expression of interest. And apart from GE Shipping, UAE-based Seaface as well as Safe Seas as well as other companies such as JM Baxi the Mumbai-based logistics group called Seven Islands, as well as Anil Agarwal promoted Vedanta, could be in the fray for Shipping Corporation of India. On the back of that, we're seeing the stock also on fire today. Having said that, it is, of course, important to note that with this, the government, of course, is now moving into the second stage, which means they will now start examining the expression of interest and the papers that have been put in by all the interested parties as well. Having said that, with this is also the second big company that the government is now looking to privatize. Remember, besides this, the government had said that they will be looking to sell its stake in Bpcl as well as BEML. Those two companies are also, of course, moving very fast. In Bpcl, the due diligence process is going to take about a month more, and thereafter the financial bids will also be called for. Having said that, one can safely say that the process for privatization for Shipping Corporation of India is now in the second stage. After this, we will see the government, of course, examining the expression of interest for the companies that have come in, and then after, if they pass the muster, then the process of due diligence is going.
All right. Well, Ruchi, thanks so much for that update on, we'll figure out more on that story in just a bit. Let's for now go on to the Bpcl story. And in fact, Bpcl is trading with significant gains today. Part of that perhaps on account of the privatization drive that is ongoing. As you know, Bpcl board has agreed to sell its 61% stake in the Numaligarh refinery for as much as 9,875 crore rupees to Oil India. We spoke to N. Vijay Gopal, who is a Director of Finance for Bpcl, and what he said was that stake sale decision was subject to approval of shareholders. The company has scheduled an extraordinary general meeting for that purpose on the 25th of March, and he expects that the process will be completed by the end of 2021. Also want to mark auto stocks as of now. We've been speaking about them both yesterday and today. They've been in focus because of the February sales that were in. We've got quite a few brokerage reports that have come in on the auto sector, specifically on Maruti Suzuki. JP Morgan has a view that has come in. They've maintained their overweight rating on Maruti Suzuki. What they're saying is that there's been another good volume print of 12% year-on-year growth, given positive demand trends, and the February print came in slightly better than their expectations for the company. What they're also saying is that they have a strong order backlog, and positive retail demand is indicating that they will move out of what has been called a benign phase. There is likely to be near-term volatility, is what JP Morgan believes, on account of raw material headwinds that we've seen. Okay, and let's also talk about, in fact, what Tata Motors' view is from Citi. Citi is indicating that they are maintaining their buy. Remember, Tata Motors is one of the standout performers in the recent past in the domestic market. Their outperformance, or rather their rebound in performance, has been marked by quite a few people. So Citi is maintaining a buy. They see a sharp focus on higher profitability products. There's also the fact that JLR is reducing the number of platforms and manufacturing capacity. The Capex plus investments in the next 3 years for JLR has been maintained at £2.5 billion per year, which is an interesting note to make. Let's also talk about a few of the other brokerage reports that have come in. There's Morgan Stanley that's spoken about autos in general. They've said that the February auto sales continue to show recovery. Or rather, the recovery trends are continuing basis the February print that has come in for most of these auto players. The recovery trends continued as almost all of the OEMs have posted sequential growth in volumes. Electric two-wheelers performed quite well, in fact, and have now formed about 0.5% of total industry sales. That will be a trend to watch out for, whether mobility in the electric space is going to continue to increase its share of the overall pie. UBS has a view on auto as well. They've said that they remain constructive on the auto pack. They say that you can perhaps consider buying Maruti Suzuki as well as Ashok Leyland. They're saying that in the passenger vehicle space, M&M has been hurt by a semiconductor shortage, which ET Now has been telling you about for quite a while. Tractors have, however, been strong on account of strong rural demand and the farm sector being strong. Two-wheelers have been flattish year on year, but TVS scooters business is looking quite strong. In the CV space, trucks have continued to improve and LCVs are looking strong as well. Let's talk about autos a little bit more, in fact, and let's speak about a particular company that is Escorts right now. It's reporting strong tractor sales in February. And we caught up with the group CFO Bharat Madan, and we tried to understand what the outlook for the segment is. And he anticipates a strong Rabi season will lead to strong tailwinds in the sector. Listen in.
Again, expected to be really quite strong, and you've seen that bit coming in from January to February. Industry doing exceptionally well. I think as you go into the season months, which is March and April, you see the momentum will still continue to build up. So overall, I think the rural cash flows have been quite strong. All factors for the rural economy look like positive as of now. So we don't really see a concern at least in the next few months. Definitely, I think beyond June, it will depend again on how the monsoon prediction is and how the road pans out. But otherwise, initial indication as of now look positive for a normal monsoon. So let's hope we are keeping our fingers crossed and hope the next year again it should be a record year for the industry.
Welcome back. You're watching Buy Now, Sell Now on ET Now. And earlier in the day, we caught up with Ajay Srivastav, who suggested to book profits but not short amid the sell-off in the market. He also suggested to sell the PSUs if the privatization does not come through. Here's a slice of their exclusive conversation.
Investors need to learn to live with the volatility. And yesterday's lesson was that when you sell off, you don't short this market. That's the bottom line. You may sell and book profit, which is fine with me. Money in the bank is worth a lot. But shorting this market is treacherous at the best of times and is certainly not where the market is located. Surely, things will keep changing. That's the nature of the market. But I think the paradigm is do not short the market at this point of time. And that's been true for the last 5 years. Shorts have not made money. So lesson is no shorts, profit booking all right, but shorts is a dangerous game to play.
That's such a great point, that sell the market but don't short the market. I just want to bring this out for our viewers. What Ajay is saying, that just because markets have fallen down, you don't go out and create naked short positions because you think market prices are higher. Trend is your friend. And I'm saying this again and again to our viewers because on my social media account, when I speak to my friends, when I look around, people just ask me, okay, we missed the market rally on the upside. Should we sell the market because markets are poised to go lower? Trust me, it does not work this way. Ajay, one sector or one space where there is definitely a reason of re-rating is PSUs. Whether it is the play on the economy or government's investment, government's commitment towards strategic stake sale. How would you approach the PSU space? Would you align with companies where a strategic stake sale is coming, or would you align with other PSUs which may not be sold but have a lot of value?
Okay. First of all, I must share that this comes with experience of holding PSUs for a long time, which didn't make money for anybody. So they have been the worst possible stocks to hold in the last 5 to 7 years. That's for all to see. Now the question is, do they get re-rated now in a significant manner, given the low valuations compared to everything? All PSUs are basically around 1 to 1.2 times or maybe lower than book value. So to that extent, you are on a safe ground to buy it. The question
Well, those are words of wisdom that you should bear in mind as a retail investor. Do stay tuned for a lot more. That's all we have for you on this edition of Buy Now, Sell Now. It was a pleasure bringing it to you from Cheryl and myself and everyone that put this show together. Do stay tuned. Lots more coming up in just a short while.